Welcome to Earnings Recap. Today we're covering Apple Inc.'s earnings report and earnings call January-March 2025. If you enjoy this kind of content, please like the video and subscribe to the channel. Today we're diving deep into Apple's financial performance for their second fiscal quarter of 2025, which ended back on March 29th. We've got the essential takeaways for you from their latest earnings report and the conference call they had with analysts afterwards, and we'll try to explain it all in plain English.
That's the plan, yeah. Cut through all that financial jargon, really highlight the key figures and what management was saying. So we'll start with the main numbers, right from the earnings report itself. And then we'll shift gears to the earnings call, look at what management talked about and, what questions the analysts were asking.
Okay, sounds good. So let's kick off with those headline numbers. Apple reported $95.4 billion in quarterly revenue, which is pretty interesting because that's a solid 5% increase compared to the same time last year, and it actually landed right at the high end of their own forecasts.
Yeah, pretty strong. And if you break that down, the product side, so iPhones, iPads, Macs, that brought in $68.7 billion. That was up 3% year over year. So it looks like, all those key hardware lines saw some growth.
Right. And then you've got services, which, wow, just keeps on growing. They hit an all-time revenue record there, $26.6 billion. That's like a 12% jump from last year.
Huge. And they said it was strong pretty much across all the different service categories, App Store, AppleCare, the whole lot.
That 12% jump is massive. Services are now, over a quarter of their total revenue?
Yeah, roughly.
Yeah.
It really shows how that side of the business is becoming, increasingly important. Less reliance maybe purely on hardware cycles. It suggests that whole ecosystem is really sticky, and they're getting better at monetizing that huge user base they have.
Yeah.
Definitely one to watch.
Absolutely. And where did this growth come from geographically?
Well, they mentioned growth in most markets they track. Yeah. And they actually hit record revenues in a whole bunch of places. The UK, Spain, Finland, Brazil, Chile, Turkey, Poland, India, and the Philippines. Quite a diverse list.
Yeah, that really speaks to their sort of global footprint, doesn't it?
Definitely.
Okay, let's talk profit. Earnings per share, or EPS, that came in at $1.65, which is up 8% from last year, and another record for the March quarter. So selling more and making more profit per share.
Exactly. And, the gross margin gives us a bit more color on that.
Yeah.
Overall, company gross margin was 47.1%, which was inside their guidance range, and actually up slightly from the quarter before, mostly because of a kind of favorable mix of what they sold.
Okay. But drilling down a bit, the margin on products specifically was 35.9%. That actually dipped a bit from the previous quarter. They mentioned product mix, foreign exchange, and just normal seasonal stuff.
Right. And it was also down year over year about 70 basis points, wasn't it?
Yeah, 70 basis points. Again, mix and currency hitting that. Just to clarify for you, a basis point is 1/100%.
But then look at the services gross margin. That tells a different story. 75.7%. That actually increased from the previous quarter. Primarily, they said, because the mix of services they sold was more profitable.
Right. That higher margin on services really helps balance things out, doesn't it? You can see why that services growth is so key for the overall picture.
Absolutely.
What about their spending, operating expenses?
Came in at $15.3 billion. That's up 6%. Compared to last year.
So they're still investing pretty heavily, it seems.
Yeah, that likely reflects, ongoing R&D spending, which is obviously vital for Apple, plus just the general costs of running and growing a business that big.
Yeah.
Sales, marketing, admin, all that stuff.
And the bottom line number, net income.
$24.8 billion, which is up from $23.6 billion in the same quarter last year. So, yeah, solid profit growth.
Good stuff. And cash flow, still strong.
Very strong. Operating cash flow was $24 billion for the quarter. That kind of cash generation gives them a lot of flexibility, for investments, returning cash to shareholders, whatever they need.
And speaking of their reach, that installed base of active devices keeps growing.
Yeah, reached an all-time high. That's across all product types and all geographic areas. It's just a massive ecosystem.
Which, again, feeds back into that services growth potential.
Exactly. That installed base is the foundation for services.
Okay, and one last thing from the report numbers. Returning cash to shareholders. They did a lot of that.
They did. $29 billion returned just in this quarter. $3.8 billion of that was dividends. And the rest, $25 billion, was share buybacks.
And they're not stopping there, right? Didn't the board authorize more buybacks?
Yep. Another $100 billion authorized for future share repurchases. Shows a lot of confidence, really. And they also bumped up the dividend by 4%. It's now $0.26 per share. That's their 13th year in a row increase in the dividend.
Okay, so that paints a pretty clear picture of the financials from the report. Now let's pivot to the earnings call. What management had to say and what the analysts were asking about. Tariffs seem like a really big topic.
Oh, definitely. It's came up a lot. They said the impact in the March quarter was actually pretty limited. They managed their supply chain and inventory well. But they did give a forecast for the current quarter, the June quarter. Assuming things stay as they are now, no new tariffs, no policy changes, they expect about $900 million in increased costs just from tariffs.
Wow, $900 million. That's a chunky number.
It is. And they give some interesting details about where products sold in the U.S. are coming from now. For iPhones sold in the U.S. this quarter, they expect the majority will actually originate from India.
India. That's a significant shift.
Yeah. And Vietnam is expected to be the source for almost all iPads, Macs, Apple Watches, and AirPods sold in the U.S. China, though, will still be the main origin point for most products sold outside the U.S. It really shows how complex that global supply chain is becoming.
It really does. And it sounds like the biggest hit this quarter is from that February IEPA tariff, the 20% one on Chinese imports to the U.S.
That seems to be the main driver, yeah. There's also apparently a huge 125% tariff in China that's affecting some of their U.S. AppleCare and accessories business there.
But interestingly, the main products, iPhone, Mac, iPad, Watch, Vision Pro, they aren't currently hit by those global reciprocal tariffs announced in April. Something about semiconductor.
That's right. Because of a specific investigation, a Section 232 investigation into semiconductors, those big product lines are currently exempt from those particular tariffs. It's all very specific.
And they mentioned building up inventory helped soften the blow for the June quarter.
Yeah, they built ahead in their manufacturing purchase obligations, which helps mitigate some of that $900 million impact.
And they didn't see people rushing out to buy stuff in March because of tariff fears.
Apparently not. No significant pull forward in demand observed.
Okay. Let's shift to product updates from the call. How did iPhone do?
iPhone revenue was up just 2%. Modest growth. They talked about the new iPhone 16, the one with the 18 chip and their own C1 modem. They really pushed the battery life on that one. And the Pro models, the 16 Pros, continue to sell well. Installed base for iPhone hit another all-time high, too.
Right. What about Mac? That seems stronger.
Yeah, Mac revenue up 7%. They highlighted the new M4 MacBook Air and the new Mac Studio with M4 Max and M3 Ultra chips, really positioning those as AI powerhouses, especially with the Apple Intelligence features like writing tools and notification summaries.
And Mac installed base also at an all-time high. Good growth and upgrades and new customers, too.
Yep, that's what they said. Strong quarter for Mac.
And iPad, that was the standout, right? Up 15%.
Yeah, 15% revenue growth for iPad.
Yeah.
Driven by that new M3 iPad Air, they talked about Apple Intelligence integration, Apple Pencil Pro, and interestingly, they said over half of the people buying iPads were actually new to the product, so still attracting new users there.
Wearables, home, and accessories, though, that was down 5%.
It was. They put that down to a tough comparison, though, because of launches they had in the same quarter last year. They did mention the Apple Watch Series 10 and AirPods 4 are coming, and they highlighted the new hearing health features for AirPods Pro 2. Watch installed base also hit a record, with over half the buyers being new to Apple Watch.
Okay, and any mention of Vision Pro?
Briefly, they mentioned that metallic immersive video, the visionOS 2.4 update brings some early Apple Intelligence features, and the Spatial Gallery app. Still early days, clearly.
Right. And services, we touched on the record revenue, the 12% growth. Anything else specific there?
They just emphasized strong performance across the board. Paid accounts, paid subscriptions hit new highs. Over 1 billion paid subscriptions now across their services.
1 billion. That's just staggering.
It really is. Apple Pay active users grew double digits. Apple TV, plus seeing record viewership, getting award nominations. They're also pushing more into sports for net baseball, MLS Season Pass, now Formula One stuff on the Apple Sports app.
And they mentioned iOS 18.4 bringing Apple Intelligence to more languages.
Yeah, expanding the reach there. They're obviously heavily invested in AI and machine learning, though they did note some of the more personalized Siri features are taking a bit longer. They want to make sure the quality is right before releasing them.
Makes sense. What about sustainability? Still a focus?
Very much so. They reported a 60% cut in emissions since 2015. Using more clean energy, more recycled materials. Still pushing hard for that 2030 carbon neutrality goal.
And enterprise. Are businesses adopting Apple more?
Seems like it. They mentioned big names like KPMG and Nubank using more Apple products and services, and some interesting uses of Vision Pro in business settings, like with Dassault Systems for design visualization, I think.
Okay, so what about the outlook? What did they guide for the current June quarter?
Right, the outlook. They expect total company revenue to grow low to mid single digits year over year. That's assuming, the current tariff situation holds and the economy doesn't change drastically.
And that includes the tariff impact.
Yes. And it also affects the gross margin guidance. They expect that to be between 45.5% and 46.5%, which importantly includes that estimated $900 million hit from tariffs we talked about.
Okay. And OPEX.
Operating expenses projected between $15.3 billion and $15.5 billion. So pretty stable there sequentially.
Got it. So after the main presentation came the Q&A with analysts. What stood out there? Tariffs again, I assume.
Oh, yeah. Lots more details sought on tariffs. Analysts wanted to understand those country of origin shifts better, the implications.
What about inventory? Did that come up?
Yes. Questions about inventory levels, making sure shipments to retailers, the sell-in, aligns with actual customer purchases, the sell-through. Was also probing on the general uncertainty around trade policy, how Apple might react, though Apple didn't announce any specific pricing changes in response.
And digging into margins.
Yep. Analysts wanted more clarity on what's driving product gross margins specifically. And also asking about services growth expectations for the second half of the year, although Apple didn't give specific guidance for June beyond the overall number.
Was there discussion about how the supply chain changes, like more U.S. sourcing, might impact margins long term?
Yes, that was explored. Also questions about how developers in Europe are behaving with the new alternative app store options. Apple basically said any impact is already baked into their current results.
Other key topics from the Q&A?
Supply chain resilience and redundancy came up, always a key topic for Apple. Asking if tariffs are actually hurting demand. Apple thinks their outlook range reflects any impact. The potential boost to iPhone sales from Apple Intelligence, which they are seeing positively in markets where it's live.
What about the broader economy? Did they ask about the U.S. consumer?
They did. Analysts wanted Apple's read on the macro environment and consumer health. Also questions about that huge $500 billion U.S. investment plan, how it breaks down between CapEx, R&D, manufacturing, but Apple didn't give a specific split.
Any discussion on the long-term AI vision, like AI on the device itself?
Yes. Questions about their strategy for AI on the edge, hardware needed for that. Also, more on why those personalized Siri features are delayed, basically just hitting their high-quality bar.
And any talk about potential risks, like legal cases impacting services?
That came up. Analysts asked about mitigation strategies for ongoing legal challenges that could affect the services business. Also, the importance of Apple developing its own foundational AI models, their data center strategy, which they describe as a hybrid approach.
And finally, the internal modem development. Still ongoing.
Yeah, they asked for an update on progress and the future there. Seems it's still a focus area.
Okay. So wrapping this all up then, it feels like overall a pretty strong quarter financially, right? Especially services setting that record.
Yeah, solid performance. And they doubled down on returning cash with the dividend boost and that massive new buyback authorization. Yeah, clearly confident.
But the shadow of tariffs is definitely there. It dominated a lot of the call discussion, and it's clearly impacting their near-term cost forecast.
Absolutely. It's a big factor in their outlook. Yeah. And alongside that, you see the continued heavy investment in innovation, especially around AI with Apple Intelligence.
You know, what really struck me was the detail on the supply chain shifts, moving so much iPhone production for the U.S. market to India and Macs and iPads to Vietnam. That's a huge undertaking.
It really is. It highlights just how adaptable and how complex their operations have become navigating this global trade environment. And I also thought it was interesting that they're still bringing in so many new customers for iPad and Mac. It shows they're still expanding their reach, not just relying on upgrades.
Right. Well, hopefully this deep dive has given you a good, clear shortcut to understanding the key points from Apple's latest results and their thinking. So maybe here's a final thought for you to chew on. You see Apple investing massively everywhere, chips, AI, manufacturing, services, while navigating these tricky global trade winds. What do you think will ultimately be the single biggest driver for their growth and profit over the next few years? Is it the hardware innovation, the services ecosystem, or maybe something else entirely?